All righty. Good morning, everybody. We just wanted to thank you guys for joining us this morning for today's special workshop that Citibank is presenting for us. My name is China Spikes. I'm the Associate Director here with Pacific Coast Regional Small Business Development Center. I've been with the organization for 5 years now, just celebrated that last month. And I've actually grown in PCR. I started off as an administrative assistant, and now I'm currently titled as the associate director. I graduated with my MBA from Pepperdine University in December 2019. And just so excited to support all the small businesses that we have that are coming through PCR SBDC. And just wanted to share a little bit about who we are and what we do. Next slide. Okay, perfect. All right, so what is the SBDC? If this is your first time with the SBDC, we want to welcome you to the programs and programs and services that we provide. The SBDC is a national program with over 1,000 locations that support small businesses. We are federally funded through the SBA, which is the Small Business Administration. We also helped small businesses with one-on-one advising, training workshops, which this is one of the workshops that we are providing for you, and as well as financial opportunities or access to capital. So you'll learn that all of our services and programming has been developed and created for our specialized clients such as yourself, the things that you guys have been asking, the things that we noticed that you guys are needing, and we wanted to make sure that you guys have the resources. So the program is no cost to you, it's your tax dollars at work. All right, well, we're so excited that this month is actually Financial Literacy Month. So one of the things, if you've been on our workshops or if you've heard myself or Let's Speak, we have been talking about financial fitness, and we've been, sharing our desire and our passion to help small businesses learn about your finances so that you know your numbers, you know what it looks like, and you know where you need to go, what adjustments that you need to take. So this is one of our workshops for the financial fitness program that we have with PCR. And so we're just so excited that this month is Financial Literacy Month. All right, so our presenter today is Cesar Mancia from Citibank. He is the Vice President of Small Business Division Sales Coach. So I'm just going to pass it over to Cesar. Thanks so much for coming, Cesar.
Good morning, and thank you for having me. It's a pleasure to join you guys again. I love what your organization is doing, helping minorities get access to capital, and I think this is a great opportunity. Hopefully the information I shared with you guys today is helpful. If you have any questions, please raise your hand and I will be more than happy to take your questions throughout the call. This is your call. Whatever I can do to help you, that's what I'm here for. So let's go ahead and get started. So today we're going to be talking about credit reports, the impact of the personal credit report on business, as well as business credit reporting. Next slide. So why are credit reporting agencies important to my business? Everything revolves around credit, right? Sometimes credit's more important than cash. If I take a step back and think about that, that's amazing, right? Cash money buys things, but sometimes if I need more than what I can afford, I need that credit, and being able to seek financing and being able to manage debt and obligations, that's why it's important. So even if you have the cash to back something and you have bad credit, you can still get declined. Here at Citi, we have a product called a cash secured line on our business side. And it's where we open a money market or a CD account with your cash, and we lend you that money through a line or a loan. But if you have bad credit, we can still decline it. Why? Because the bank is at risk of a loss if we were to lend money on bad credit. So what I hope to do today is introduce credit, understand why it's looked at, understand how it affects your business. So let's move on to the next slide here. The definition of credit is the ability to borrow money or goods based on the promise that it will be paid back, and the importance for that financial stability and success of an individual business. So it's basically your reputation on the line. What you have done in the past will help us determine what you will do in the future. So if you haven't paid your bills on time, if you haven't paid your vendors on time, that all affects the credit decisions that banks or institutions will use to lend you or extend credit. What I always tell my bankers is, think of it this way. Let's say I came up to you and I borrowed $5 from you for lunch, right? So the business is coming up to the bank borrowing $5 for lunch. If I don't pay you back, next time I come to you, you're not going to want to lend me that money, right? Same thing with the business. If you come to the bank asking for a loan and you don't pay us back, the bank is going to be worried about lending you that money. So it's kind of developing a trust relationship between you and the institution that's lending you the money. That's the importance of the credit. So if we go on to the next slide, what is a personal credit report? It basically tells the bank's lenders who you are, how much debt you have, and how long you've had it, right? The frequency you've applied. So there's a lot of clients that apply for credit after credit after credit, and that's not a good thing. You need to monitor and be frugal about the number of applications that you submit, because all of that can be a negative thing. How much credit are you using? You may have let's say, credit card with $10,000, right? You don't want to max that out. Banks want to see that you're managing your accounts properly, that you're staying below the 30-40% mark on that credit usage. Whether you make your payments on time, you're late, or you're a few days late, that all affects the decisions that the bank will make, and when it comes to lending you money. What negative information about you exists on public records, such as bankruptcies and foreclosures? We use credit bureaus, and I said on the previous training that we did last month, is we use Google searches and Bing searches to understand who the client is in front of us, to see if there's any negative information we should be aware about. It's all public information that we will look at to make sure that we are lending the money to the person that will pay us back, because at the end of the day, we want to get our funds back from the people that we lend it to. If we move on to the next slide. So banks and lending institutions use these three main companies: Equifax, Experian, TransUnion, to pool our credit bureaus. So I have one of our poll questions here on this slide. Can we do the poll question?
All right, so you guys, we are good. We're about to launch a poll right now, so please be prepared to answer. That poll question is, you can request one free credit report a year, true or false? So go ahead and enter in your answers. Click true or false on your screen.
This poll.
All right, I don't see anybody responding. You guys can go ahead and click true or false on your screen.
Yeah, we're at 73. We have 4 more people. pending an answer. All right.
Okay,
we'll
we,
end
we
this
have some
poll.
people typing it in the chat.
Okay.
Okay, so let's end it in the poll. I didn't get any responses.
So I got 11 responses. I show 11, 100% true. You guys all answered that correctly. So yes, you get one free credit report every year, and you can get it here on this website at annualcreditreport.com. The credit report that you do get for free does not include the actual credit score, but it's something that you can, if you review it, you can see any negative information, any late pays, any of that stuff, any the derogatory information that you may want to, take a look at and make sure that it's yours. With all the scams and identity theft, and being a victim of identity theft myself, you do want to take the time to go through and verify the information. If you want to get the hard credit score, then there's a little bit of a fee there. But it's something that you get free and you should monitor. Every time that you apply for a personal credit, a credit card or a loan or any of that stuff that's on the personal side, you do also get a free credit report from the institution that pulled your credit. So be aware of that. You do have access, and stay on top of your credit bureau so that you can make sure that there's nothing negative on there that shouldn't be on. Let's move on to the next slide here.
If you guys have any questions, you guys can type them in the chat and we'll answer those periodically throughout the session.
So what is on your personal credit bureau? It's pretty interesting if you take a look at it. So your personal identifying information, so the basics, right? Your name, social security number, your current and previous address, date of birth, all that stuff, right? Then you have all open and all closed credit bureau information, so accounts that you've opened in the past. And there's some things on here that may be from when you were 16, 17 years old. So for me, it's many, many moons ago, right? So any charge-offs, collections, all that stuff is on there. You'll also see a list of businesses that have viewed your credit bureau. So anyone that's inquired to try to see your credit history and your payment history, you'll see that on there. Any bankruptcies and foreclosures will be listed on there. One of the things that we look at is the total debt ratio, right? We want to make sure that when we're looking at the financial picture of an individual, that their total debt ratio is less than 50%. That's what we're shooting for. If we see it over 50%, we start getting uncomfortable that the client may not be able to pay back the loans or the financial obligations that they're applying for. So at that point, it may cause for a negative impact or a negative result on an application. We also look at any current slow pays, any 30, 60, 90-day derogatory information. We're looking at the collection history if there's anything negative. And one of the things when it comes to this section here where it says list of businesses that have viewed, that's inquiries. If we see a lot of inquiries on a credit bureau, and I'd say anything over 3 within the past 6 months, we're going to ask questions. Now, if you went out to, like we recently went and bought a car, and the car dealership ran our credit score, I don't even know how many times. So I had like 6 or 7 inquiries. So if we're able to answer that, then the bank is okay with it. But if you're applying for an account at, let's say, B of A, Citi, Chase, Wells Fargo, and we see all that, that's what we start saying, this is a red flag. We need to ask more questions before we make a decision. All right, let's move on to the next one. So what is not on there? So we can't see your checking and savings account balances. We can't see your true income. It's only what's reported. We can't see your medical history or purchases that you've made with cash or your checking account or any of that stuff. Business account information, again, we can't see any deposits. We don't know the race, gender, or your religion through the credit bureau. We don't know your driving record. So that's a good thing for some of us, right? And then marital status, that's not on there either. So those are some things that do not affect your credit, and it is not listed on there. So that's a good thing in some cases, right? If we move on to the next slide here, what is a personal credit score? So the credit scores range anywhere from 3 to 850 points. It's a number that helps the lender determine the risk criteria that we want to use. There's two models that banks and lenders use. One is the FICO, and the other is a Vantage score. Some lenders, including Citi, take that information with any other analytical information that's available, and we create our own kind of credit score that helps us determine through our risk criteria whether you are a lendable client. So it's not just the FICO score, but there is other scores that the institutions will create to help determine whether you are lendable on our end. Move on to the next slide. So these are the two differences between FICO and Vantage scoring. We use FICO scoring here at Citi, and basically it weights the past payment history at 35% of overall weighting, outstanding debt at 30, how long you've had your credit at 15%, new applications of credit at 10, and then types of credit another 10. One thing I want to focus on here is how long you've had credit. So you can have an 800 FICO score, but if you've only had credit for 12 months, that may be an issue because it's not long enough of a history for the bank to understand how your payment trend is going to be. So the longer history that you have, the better benefit that you have. Vantage credit score, that's something that a lot of car dealerships use. So on that one, you look at past payment history, which is extremely influential, age and type of credit, the percentage of credit used, total balance and debt, recent credit behavior and inquiries, and available credit. So those two on the bottom, they're looked at, but not as influential when it comes to making decisions. It's more on the past and previous. So, so the next poll question here, if we could pull it up.
The next poll question is about having a higher credit score may get you a lower interest rate, true or false?
And on this one, I don't see anything. So hopefully you see it, China.
Not seeing it on my end either. Let's try that again.
Right. There we go. It's coming. All right. So these are easy questions. I know you guys can answer them.
Few seconds, and then after the poll results, we will answer some questions.
Okay.
All right, 3, 2, 1.
All right. So I have 11 out of 12 of you answered correctly. Yes. You do get a better interest rate having a higher score because there's less risk for the banks or institutions. They feel that your payment history with the credit score helps us feel more comfortable. And it's kind of back to that scenario of lending your friend $5 for lunch. You lent the $5, you paid it back. So I'm more willing to lend you my money again next time. All right, and so China, you said there's a couple questions.
Yes, there was a couple of questions. I know one of the questions you actually answered. So for business loans, which of the 3 agencies does your bank use?
So So we use Experian and Equifax. We don't use TransUnion when it comes to our lending on the personal side. And we also pull Experian and Equifax commercial. And we'll talk about those two a little bit later in the presentation.
And then we had a question about the red flags, about having the different inquiries from the different banks. Why is that a red flag?
Because so let's say you were to get a loan with Wells today, and you'd go apply at Citi today as well, and they both book at the same time, we wouldn't see that right away, right? So we want to make sure that you're not going to every bank and applying for the same product and overextending yourself. So it comes to the point where if you were to get those multiple lines or loans, you may overextend yourself where we're more at risk of taking a loss. So that's why it's a red flag. So ultimately, we use all of this to make sure that we're going to get paid back the money that we lent you. So that lunch money that we're providing to your business, we're going to get that back and be more willing to lend you those funds.
All right, and then just two more questions. Is the past type of credit weighted differently?
Is the past type of credit weighted differently? It depends on how old the past credit is. So let's say in my case, I'm 44 years old. An account that I took out when I was 18 years old is not going to be reviewed as heavily as something that I took out when I was maybe 35 years old, right? So a past something that's so long ago is it's going to be on there. It's always going to be part of your record. That's always going to follow you, but it's not going to be weighted as heavily as something that's more current.
Perfect. And then the last question before we get started, are banks making any accommodations because of COVID caused financial derailments?
Yes, each bank has different lending criteria and different opportunities for lending. We've adjusted our models to accommodate some of the COVID impact to an extent, but at the end of the day, we want to make sure that when we do lend, that we are going to get our money back. We do partner up with the SBA and issue guarantees with them. So sometimes if there's an issue with the credit or some sort of asset or collateral issue, we'll partner up with the SBA to make sure that we have that guarantee in place so that we're more secure in lending those funds. But yes, we are and have adjusted.
Perfect. So we will answer some more questions towards the end of the session. So please continue to write your questions in the chat.
Awesome. So moving on, poor credit is basically a higher risk for the institution. It's more likely the borrower is more likely to get denied credit. If approved, the interest rate is going to be a lot higher than if you have good credit, right? The better your credit is, the lower the risk is for the institution. So the borrower is going to be more appealing to the institution to lend the funds to. You're going to get a better rate, as you guys all answered on that poll question. Moving on to the next slide. So some protections that we have as consumers, right? Some laws and regulations. So, we have the Fair Credit Act, the Fair and Accurate Credit Transaction Act. So you have the right as an individual to dispute any information that you feel is not correct on your credit. And that's one of the things that you should be doing when you are reviewing your annual credit report. That's how I found out I had identity theft, was by looking at my credit report. And the institution has the obligation to correct that and make sure that the information that's being reviewed is accurate. You have the right to view your credit bureau If you apply for a loan and it's declined, you have the decline reason is for personal credit history. You have the right to pull that credit bureau and see why the institution would be declining you. So again, request that annual report, double check it, do your homework, make sure that you know what's on there. That way, when you do go apply, it's not a shock to you. You know, you go in with that confidence to know that your credit is spick and span and sparkly, and you're going to go in there and get your approval because you have strong credit. All right, so let's move on to the next slide. So best practices for building a strong personal credit history: maintain healthy credit, pay your loans and other bills on time. So if your partner lends you that $5 for lunch, pay them back so that they'll lend you $5 again for lunch again. Same thing with the credit card. If you use that credit card for lunch, make sure you pay back the credit card so that it makes them more comfortable lending you funds in the future. Keep outstanding revolving debt balances low. Remember, this is part of that 50% overall debt ratio. We want to make sure that you don't utilize more than 30% of your credit card so that it doesn't impact your credit as much, right? The higher you get above that 30%, the lower, the more it impacts your credit score. Pay off outstanding collections accounts and other debt. Make sure you do that. Pay it off. If you took out the loan, if you had the credit card and you use the money, pay it back. If it does end up in collections, work out an agreement with them to pay it back over time. Make sure you stay on top of those payments and make sure that once that collection is resolved, that the collection company upholds their end of the bargain and removes it from your credit bureau. Make sure that it's updated. So you pull your annual credit report and make sure that they've updated that collection information, and keep any records that the collection company sends you saying that it's been resolved. That way, if you do need to dispute it, you have the documentation that you can present to the credit bureaus to have them remove that if the collection company doesn't. Avoid negative events that could result in public records, such as a bankruptcy or foreclosure. Sometimes it happens, divorce, disease, death, and we have to declare bankruptcy. If you do have to, stay on top of whatever the court order is on what you have to pay. Other than that, make sure you have a clear understanding that that will affect your credit. And also just know that it's not an end all to being able to get credit. There is opportunities. It may cost a little bit more, but if you have a good reason why there's a bankruptcy or foreclosure, that may be something that banks may be willing to take a chance on. Comparison shop for major loans within a 45-day window. That again is kind of like what I was talking about with the car loan. When you do apply, there is a lot of inquiries, but once the credit bureaus settle, they'll validate that they are part of that one application process. Maintain a mixture of credit accounts. So, you shouldn't just have credit cards. The credit bureaus are based on your credit cards, your vendors, and any major like car or loans that you may have. And then avoid closing older accounts that are in good standing. So if that account that I took out when I was 18 years old that I've paid, over the past 20 years in good standing, make sure you don't close that account because that'll affect your credit score negatively. Okay, next one. When personal credit history is important for my business. So your personal credit score is always going to be important when applying for a business loan. Banks don't just pull your business credit bureau, they will pull your personal credit bureau. So you need to make sure that you're on top of your personal history. It will affect your the credit decision. I would say if we put a percentage, 80% of the credit decision is going to be based on the personal credit history, and the other 20% will be on the business credit history. And the reason is because there's more information on the personal credit bureau versus the business credit bureau. So, having good credit history is going to help you establish credit for your business. It'll help with the personal guarantee or co-signing for a business loan. It'll give you access to financing and help you grow your business through giving you opportunities for trade discounts for the business. Next one. What are business credit reports? Similar to the consumer credit report, and basically it's a risk assessment tool. It gives the banks a view of how your business is performing when it comes to repayment of debt. The thing about business credit bureaus, it doesn't just look at your credit cards and loan payment history. It also takes into consideration vendors. So if you have a relationship with a vendor that provides you raw material, if you have a relationship with UPS or FedEx or your commercial telephone company, if you're not paying those vendors on time, that all gets reported to the business credit bureau and can affect the credit score for the business credit and can affect the decision on whether the bank will issue you credit. Because if you're not paying your vendors on time, what's to say that you're going to pay the bank that's lending you the money on time as well? Okay, moving on to the next slide. Personal versus credit history. So on the personal side, it's a record of your use of credit reported to consumer credit reporting agencies, which are the TransUnion, Equifax, and Experian. On the business credit history, your business record of handling debt and financial obligations reported to business credit reporting agencies, which are going to be Experian and Equifax Commercial. So Experian and Equifax, as you can see, both touch on business and personal. So those are the reasons why we pulled those two versus TransUnion. If we move on to the next slide here. Personal versus business continued. So we're going to look on the personal credit report. Remember, we're looking at your personal identifying information, your credit history, any inquiries or public record that's available through the personal credit bureau. On the business side, we're going to identify the business, its ownership, who owns the business, make sure it's valid, the address and location of the business credit history, if they have any, with any credit cards or any vendors, business background or registration with any financial information that's available. And then any public records, are there any UCC filings? Are there any bankruptcies or collections or any of that stuff that's listed on the Business Credit Bureau? So these are the major players. Again, Equifax and Experian, they're both focusing on how the business pays back their lines, loans, and any vendor information. But there's also Dun & Bradstreet. It focuses on interactions with vendors and suppliers. It's a trade credit performance analytics system. We use that to validate that a business is up and running. We do pull all three of these bureaus. Even for an account opening, we won't pull, let's say you're opening a business checking account, we don't pull the Equifax or Experian, but we will pull Dun & Bradstreet to validate that it is an active business. So if you don't have or never heard of Dun & Bradstreet, you can actually log on to the website and register your business and update any of the demographic information for your business, which makes it more of an accurate reporting for your business. So if we move on to the next slide here. So what's on the Business Credit Bureau? A little bit more information is basically the business name and any aliases, the address, phone number, a DUNS number. So that's your Dun & Bradstreet information. So when you do register your account, if you haven't done so, you'll get a number and that identifies your industry type. Companies that have granted credit for you, you'll see that on there. Any payment data from the suppliers or creditors, so that's with your FedEx or UPS or DHL accounts. any, let's say if you have Verizon Business, it'll be on there. And then a risk score, it will be listed for each one of those categories. Any legal structure or ownership will be listed on there. History of affiliations, any corporate finance reporting, any contracts, grants that are approved by the government are listed on there. Self-reported data that you've done through Dun & Bradstreet, any lawsuits, liens, judgments, all that good stuff is all on there, and ultimately will help the institution decide whether we want to take the chance on lending you the money. Okay, moving on to the next one. So unlike the consumer credit, the FCRA and the FACTA Act do not protect the business credit report the same way. There's a little bit less government protection when it comes to business credit, but you still have the opportunity to dispute information that you feel is incorrect. Business credit reporting agencies have different ways of disputing items. So you just reach out to Experian or Equifax Commercial to dispute any items that are on there when you're reviewing your credit bureau. There is no annual free credit on the business side. I know on the Experian Commercial, it costs about $100 to view that report. So I would say it is, don't pull that one on a regular basis unless when you're applying for something, it does come back with negative information. Then at that point, you can ask the bank what the negative information was and dispute that way if it doesn't make sense. So that's that one. So I like this one. This is, on the personal credit score, it's all, the three reports are exactly the same, right? Experian, TransUnion, Equifax, they're showing the same information, just different formulas and coming up. So we have the three apples, right? We have red, green, and a yellow apple. They're pretty much the same. The business credit, it's like a jumble of fruit, right? It's a bunch of different types of fruit and everybody looks at it differently. And the three organizations look at credit in a different way and issue scores a different way. So it's basically up to the bank to determine how they're going to use that information to help with the credit decision. And I'll tell you the way that we look at it, we want to make sure that there's no active liens or collections, bankruptcies, and that there's no issues with payments being made to any of the vendors or financial institutions listed on there. That's what we're using it for. And we're also using it for validation that there's no UCC filing on the business. Checking your business credit report. So you can check your business credit report. Like I said, for accurate information, it does cost $100 to pull. So be wary of that. You can go on to Dun & Bradstreet and update your information, and that's pretty much free to set up the account. There are some fees for some add-ons, but you can go on to Dun & Bradstreet to validate and the information on there. Okay, moving on. Best practices, again, pay back that lunch money. Make sure you're paying your loans and your bills on time. Make sure your business is visible through Dun & Bradstreet and that the information is accurate and up to date. Maintain a good relationship with those suppliers and vendors. If they're extending you credit for your raw materials or supplies that you're buying from them or for the services that they're providing you, make sure you stay on top of it. Separate your personal and business finances. You shouldn't mix your personal funds with your business funds. Keep them both separate. So it helps you, one, it helps make your accountant or CPAs or tax preparers life a lot easier than this time of year when they're doing your taxes, right? Because it helps you determine who's paying what. And it helps the banks determine that you are actually running the business through a business relationship and not a personal relationship. And then monitor your personal and business credit histories as needed at least once a year and stay on top of it. Dispute any of those items that are incorrect on your business credit bureau. All right, so the last poll question we have here is it up or is it, can we
Give
pull it up?
me 1 second. We'll
Yeah.
share that real quick. All right, so the last one, we'll launch that. And bad credit gives you more flexibility, true or false? Bad credit gives you more flexibility. I think this one is real easy.
Right?
Yes, that one was funny.
All right.
All right, just a few more seconds and we will end it. 3, 2, and 1. Let's share. What do we have? Woohoo! We got 100%.
Yeah, so 100% false, right? Having bad credit does not give us flexibility. It makes our life harder, right? And more expensive. So, you know, you talk about going from, let's say, a 7% interest rate on a business loan up to a 15 or 20%, or sometimes even higher interest rate on that. So it limits, it kind of chokes off the business. And that's because you're not paying your lunch money back. So make sure you pay your lunch money back, and then that'll ultimately help you with your credit score. So what's the importance of credit for a business? It gives us and frees up the ability to finance things, right? It gives us an opportunity to borrow money for cheaper costs. It helps us acquire inventory to manufacture. It helps us purchase necessary equipment to make our life easier. And it helps us manage our capital. So for those slow times of year, it helps us, you know, survive and helps our business grow. It gives us stability. It gives us a sense of comfort to know that if there is an emergency, if there is a leak in the roof, if there is a pipe broken in the wall, that I can reach out and get a line, a loan, a credit card to pay whatever I need at a lower rate to help my business grow and continue operations. Even during times of COVID, we had to extend credit and get credit to be able to survive and, you know, put up dividers and get PPE equipment for our employees. So it's always important to apply for credit, not just in emergencies, right? Don't go and rush to get a line of credit when there's an emergency. You should apply for a line of credit when you don't need it and have it available to yourself when you don't need it. That way, when you do need it, it's there and ready to go for you. So don't wait for the last minute to apply for a line of credit. Get it before you need it. Moving on to the next one. So this is the personal and business credit spectrum, you know, so importance of personal credit versus importance of business credit. So aspiring entrepreneurs and emerging businesses will need to rely heavily on personal credit as the business is established. And honestly, I think you're always going to rely heavily on personal credit when applying for business, unless you're a major corporation. So you're a Coca-Cola or somebody like that, right? McDonald's or whatever. You're always going to have to provide a personal guarantee. We're always going to pull your personal credit. So make sure your personal credit health is on par where it needs to be. As a small business grows, business credit will become increasingly important, but personal credit is still a factor in lending decisions, right? So as your business grows and you have more vendors, they start reporting on those business Equifax and business Experian. We'll be able to see that relationship, and it'll help us determine whether we want to lend. But ultimately, like I said, personal credit is going to be an important key to getting that lending that you need. Only very large, sophisticated businesses may not need to rely on business owners' personal credit, right? So Disney, you know, Tesla, McDonald's, things like that. Those, you know, don't need to pull their personal credit to apply for things. But the rest of us, the 99.9% of us do. So make sure you're on top what you're doing and make sure you make those payments on time. All right, so let's put it all together as we round the corner, right? So the last training we did was the 5 C's, and here's where it comes together. This is what the banks are gonna and institutions are going to look at to lend you that money. So the capacity, the collateral, credit history, condition, and character, right? So traditional underwriting is going to look at the 5 C's. And then on top of that, we're going to look at personal credit and business credit. Non-traditional means that they're going to look at, let's say, on the personal side. I don't know if you ever see those commercials with John Cena for Experian, right, or Equifax, where he's with that purple cow and saying, you know, pay for the booster. And that's basically the non-traditional credit, where they're looking at how you pay your cell phone bill, how you pay your utility bills. So that's the non-traditional. And that's something new that a lot of fintechs are using when it comes to lending. They're the ones that do those personal loans with the high 25, 30% interest rates. They're doing non-traditional lending. So that's what that means there. So if we move on to the next slide. So there's difference in lenders. So lender A looks at the 5 C's and emphasizes personal credit and collateral. And then lender B looks at the 5 C and emphasizes business credit and non-traditional credit. So that's going to be more of the smaller, I'd say the banks look at the lender A, and the smaller lending fintechs will look at more lending B. And then the non-traditional credit data, that's going to be more of the personal loans at the higher 25, 30, 40% interest. And please be careful with those. Don't be applying for those and get yourself stuck in something where, yes, it may help you up front, and then you end up getting stuck with those. So be very wary of those lenders out there, predatory lenders, right? Keys to remember: pay your friend back for the lunch money, pay your bank back for the lunch money. Most important, right? Credit reports created by consumer reporting agencies and other companies. Make sure you take a look at them once a year on the personal side, pull your annual credit report, make sure the information is valid, that anything that needs to be disputed is disputed and removed. Same thing on the business. Go on to Dun & Bradstreet, make sure you validate the information is correct, update it, pay back your loans and bills on time. That is ultimately the most important thing, which will give you the best credit possible. And the last one here. Lenders and others use credit information in different ways to make decisions. Not one lender has the same process. So what we do here at Citi is going to be different from what they do at B of A or Wells. So everybody does it a little bit different. Everybody's risk appetite is a little different. So make sure you find a lender that is willing to take your type of risk, understand your credit. So if you pull your credit bureau once a year, and you know what's on there, you know what to expect to walk in. Don't be surprised to walk into a bank and get declined if you have a 600 FICO score, right? If you know you have that, you know maybe you should hold off on it, work on building up that credit score to get you a higher probability of approval. Personal and business credit reporting is important for your business. Manage your personal and business credit reports and score can help you establish and build strong credit history. So again, pay back your lunch money, and you shouldn't have an issue when it comes to that. So all this information is available on the SBA Money Smart for Small Business. This one is actually the 2019 course called Building Your Credit. So with that, I'll open it up for any questions, and then I can hopefully answer for you guys.
Do have 2 questions. One was, let's say, 35 years of credit card experience, and then 5 years auto loan. Are they weighted differently? Those 2, 35 years credit?
Yep. So we're going to look at the history of the credit card to see if there's any late or slow pays, right? To make sure that you have been paying it on time. And then the car loan is a major loan, right? So when we do business credit lending, it's a major loan. So we wanted to compare, back to the red, green, and yellow apple. We want to compare the two big loans versus a small credit card, right? So a big car loan is going to give us more of a comfortable space to lend to, and an opportunity to realize how you were able to handle and manage that debt. So yes, they are looked at, and they are looked at differently.
We have another question in the chat. I have applied for a business credit card and they requested my social security number and EIN number. Now, every time I use it and have a balance, it impacts my personal utilization. Is it possible to avoid this impact?
So every credit card company is different, so I can't answer for all. But when you are applying for a business credit card with us, yes, we pull your personal credit bureau, and yes, it is attached to your personal credit bureau. Now, if you were to apply for a business line or loan with us, we do pull your business credit, your personal credit report, and we validate the information, but it is not listed on your personal credit history that you do have an outstanding business loan. The only time that we will see it on there is if you default on that business credit, then it will populate on your personal credit that there is a default on the business side. But unfortunately, I don't think there is a way to separate the two, because ultimately the business credit card, unless you have a corporate card, is going to be based off of your personal credit history.
All right, we just got another question. Is your credit score negatively affected when you check it annually?
So when you do that free annual report, no, it's not an inquiry. It's just your annual. You're allowed by law to pull that without a negative impact to your credit. The time that it does affect is when, let's say you were to go on, you pull that credit report, right, that free one, and then you go next month and you pull your own credit score and pay for it and see the actual credit score, then that will impact your credit score as an inquiry. But inquiries usually last 3 to 6 months before they fall off.
Any other questions? That was the last one I had in the chat. Maybe you guys want to raise your hand. I can take you guys off mute. Okay, oh, Maddie. Okay, give me 1 second. Okay, go ahead, Miss Maddie.
I think she's still on mute.
You have to unmute yourself now, Miss Maddie. Unmute yourself. There we go.
Okay, thank you so much. First of all, thank you guys so much. The information is just incredible. I have 2 questions. I did try the chat, but for some reason I'm not getting through like everybody else. So I wanted to know, what is the sweet spot, okay, for the FICO score, okay, that you would suggest, Cesar, as far as, where to begin and where to end?
Yeah.
I know, maybe
So
something, or
yeah, I'm willing to tell you what we look at is a FICO of 680 or above. And that,
okay.
that 680 is a 680 with no collections, no liens, and no IRS tax payment plans.
Okay.
That's what we're looking at. Yeah. So if you have a 680 and above, you'll hit the nail there, as long as, again, doesn't have any of those negative things attached to it.
Great. Okay, that's really important. Thank you. I really appreciate that. And my last one is, if you have a medical bill that wasn't paid, what do you suggest? Is one medical bill, but you know, it wasn't something I couldn't pay. It was something that I found out that was there and I didn't realize it was there.
Yeah.
So how do you, you know, satisfy that if you have, you know, if your credit is, you know, pretty good? Okay.
Yeah.
So,
So
but
I
you
would
got
reach out
something up
to
here.
the, whether it's the medical facility or the medical collector, and see if there's a way to resolve it, come up with a payment plan, come up with, you know, hey, if I don't know what the bill is, so let's say it's a $500 bill and they're willing to take less for it, then, you know, negotiate it
Okay.
to get it removed off. And then again, keep any letters that they provide you saying that it's been resolved, so that you can submit it to Equifax, Experian, and TransUnion and have it removed from your credit.
Okay. So it can be removed. Okay.
Yeah, it can. It
Oh,
can.
okay,
Mhm.
great. Thank you. Thank you
Yep.
guys so much. I appreciate you.
No problem.
We have another chat. Do collection accounts ever drop off?
Do they ever? Yes. Do they automatically? No. So you have to have them. You have to work at it to get it to come off, and you usually have to dispute it with the credit bureaus. I would say generally show on there for 7 years, and you'd have to fight with the credit bureaus to get those removed off.
Yeah, and then sometimes I know that some collection agencies, they'll sell their deck
Mhm.
to somebody else.
And
And
it starts
so
all
you
over.
it may have been dropped off that company, but now it's on somebody else's list. So just, you know, be sure to check in with that. And like Caesar is saying, like, make sure you have the documentation saying that, you know, if you only paid $300 of $1,000 debt that you had, that it was canceled, and then make sure you contact the credit union to let them know that this has been resolved.
Yeah.
And I think we have one more question. What if the company no longer exists?
Dispute it. That's all I can say is try to
It's the
dispute it with the
reflection.
credit bureau. Dispute it. They will provide you information. The debtor has 30 or 45 days to get back to the credit bureau. If there's no response, the credit bureau will remove it, and keep that removal letter and confirmation, just in case it ever does pop back up. You can send it back to them, say, hey, you guys removed this 2 years ago, 3 years ago. Keep a PDF, keep a hard file, keep something, just keep your records.
Right. I don't see any new questions. So what I would say to kind of close this out, we do have some upcoming workshops. Let's see. On next Tuesday, we have Emma Maxey from the Small Business Administration, so the SBA, is going to be hanging out with us and talking about doing business with the federal government. So come and hang out with us again next week. We have a few more workshops with Caesar, I believe 2 more this year, 1 more this year. Yes, so we're going to be hanging out. So be on the lookout. Caesar, as a representative from Citibank, is going to be sharing more information. We're not sharing only financial literacy this month, but all year. So come hang out with us again. If you registered for the profit projections with Leonard, I think that time has been moved to 12, so you may have to go and jump on over there. And then all I want to say is what Caesar's been saying, pay your lunch money, pay your lunch money back.
All right.
We want you guys to continue to do that. So hopefully that stuck with you. Thank you so much, Caesar, for providing so much good gems for us today about personal credit and business credit. Very important. So we appreciate you.
All right. Thank you, guys. Have a great weekend.